There's a new corporate crypto buyer on the block and it's quietly doing something nobody expected, matching Michael Saylor's pace, but for Ethereum. Bitmine Immersion Technologies, ticker BMNR, just bought over 100,000 Ether in a single week worth $234 million. That's not a typo. This is the same scale as Strategy's baseline weekly Bitcoin buys of $200 to $300 million. When you strip out the STRC-fueled spikes, Bitmine's Ether accumulation is now neck and neck with the Saylor playbook. Let's back up. Bitmine Immersion Technologies is chaired by Tom Lee, the famously bullish strategist from Fundstrat. The company started pivoting to its current Ethereum treasury strategy in June 2025. Just 10 months later they hit 5 million ETH tokens. 5 million Ether is about 4.21% of the entire circulating supply of the second largest cryptocurrency. That's a staggering concentration for any single corporate entity outside of the ETFs. But here's the really interesting part about how they did it. Bitmine's buying accelerated through a painful market drawdown. In early January 2026, they were buying roughly $76 million worth of ETH per week. By March, that jumped to about $120 million per week with a purchase of 61,000 tokens. And by late April, they hit $234 million in a single week. The pace kept accelerating, not slowing down. Tom Lee's framing for this aggressive buying is that crypto is in the late stages of what he calls a mini-crypto winter. He said publicly, and I quote, "Nobody rings the bell at the bottom." So Bitmine's strategy is to slightly increase its pace of accumulation. This matters because most other digital asset treasury companies paused or slowed accumulation during the February price drop that pushed Bitcoin to the mid-60,000s and Ether below $1,900. Strategy itself ended a 13-week Bitcoin buying streak in late March before restarting. Let's talk about the size of this position. Bitmine's total crypto and cash holdings sat at $13.3 billion as of early April. They've purchased over $16 billion worth of Ether. But the market downturn meant they were sitting on nearly $8 billion in unrealized losses at one point. That's a paper loss of 50%. Most companies would panic sell. The CEO would be fired. But Bitmine kept buying. And 2 months later, Ether is up 22% from those February lows. Their conviction is being rewarded. But here's the secret weapon most people miss. Bitmine is staking roughly 73% of its Ether holdings. That generates approximately $264 million in annualized revenue from staking yield alone. The crypto is working for them while they hold it. Back in March, when they held over 4.5 million ETH, the staking revenue was $174 million annually. As they added more tokens and the staking ratio increased, that number climbed to the current $264 million. That's a yield on cost that most treasury teams can only dream of. Now let's compare Bitmine to Strategy directly. Both companies use the same playbook: capital markets activity to fund crypto purchases. Strategy uses preferred stock and convertible debt. Bitmine uses equity issuance. But the structural outcome is the same: aggressive accumulation. Strategy's April 21st purchase of $2.54 billion worth of Bitcoin remains the largest single corporate crypto buy of the year. But that was an STRC-fueled spike. The baseline weekly buys are $200 to $300 million, and Bitmine's $234 million last week puts them in the same league. If this pattern holds for another month, Ethereum will have something it has never had before: a strategy-equivalent corporate buyer absorbing supply each week regardless of price. That's a structural demand driver that ETH has simply never had in its entire history. The implications for the Ether market are profound. A single buyer absorbing 5,000 to 10,000 ETH per week, every week, removes massive amounts of supply from exchanges. Combined with the ETFs, the supply squeeze narrative for Ethereum just got much more credible. Bitmine's accumulation is also a strong signal about institutional sentiment. Tom Lee and Fundstrat are not just talking, they're putting billions of dollars of their shareholders' money where their mouth is. That carries more weight than any CNBC appearance. But let's be clear about the risks. The February drawdown showed that this strategy is incredibly sensitive to Ethereum's price. An $8 billion unrealized loss would destroy most companies. Bitmine has deep capital markets access through its equity structure, which gives them staying power. The question investors need to ask is what happens if Ether drops another 30%. Bitmine would be sitting on over $12 billion in paper losses. The staking revenue of $264 million would help, but it's a drop in the bucket against a multi-billion-dollar decline. On the flip side, if Ether returns to its all-time highs, Bitmine's holdings would be worth over $25 billion. The asymmetry is extreme. That's exactly the kind of bet Tom Lee is making: late-stage mini-winter accumulation with massive upside potential. For the broader crypto market, Bitmine's emergence is significant. For years, everyone said we need a corporate buyer for Ethereum equivalent to what MicroStrategy did for Bitcoin. Well, now we have one. Bitmine is carrying that torch, and the data shows they're not slowing down. One more number to put this in perspective. Bitmine's 5 million ETH at current prices represents approximately 4.2% of all Ether that will ever exist. That's larger than most country-level holdings, larger than most ETF flows, and it happened in just 10 months. The market is still pricing Bitmine mostly as a mining company, but their transformation into a crypto treasury firm is complete. Their staking revenue alone is $264 million annually. That's real cash flow, not speculation. So what does this mean for you as a crypto investor? Watch Bitmine's weekly disclosures like you watch strategies. The pace of their buys is now a leading indicator for Ethereum institutional demand. If they maintain this trajectory, ETH supply dynamics will fundamentally shift in 2026. The bottom line is this: Bitmine Immersion Technologies has become the second most important corporate crypto buyer on the planet. They're accumulating Ether at a pace that rivals Michael Saylor's Bitcoin buys. They're generating hundreds of millions in staking yield, and they're not stopping. That changes the game for Ethereum. That's the story of Bitmine, the new corporate whale reshaping Ethereum's market structure. If you found this valuable, hit subscribe and turn on notifications. We're tracking this story weekly. Thanks for watching on Orvayxen. Thanks for watching. If you found this valuable, subscribe for more deep dives.